Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. Last night, we spoke for a bit about Maple Finance and some of the difficulties that they were running into, and I wanted to give you a bit of an update. Nexus Mutual is a peer-to-peer insurance alternative, and they are expecting to take a loss on their investment in a credit pool on Maple Finance. Now, listeners from last night will remember that Maple Finance is a decentralized lending platform. And now the company warned about a potential loss of 2,461 ETH, which is around $3 million, due to orthogonal's trading default. Nexus has started to withdraw all of their funds from the affected pool, which represents about 1.6% of their assets. In August, Nexus deposited over 15,000 ETH worth around $19.3 million. That went into the credit pool on Maple Finance following a community vote. However, more of Nexus's funds are potentially at risk due to orthogonal trading default debt and Oros Global's failure to repay a loan. Now, Nexus Mutual is warning that it may take a loss on its investment in the credit pool on Maple Finance. What that means is that the potential loss is due to orthogonal's trading default on its debt, and Maple's credit dashboard shows that the defaulted debt represents 56% of the outstanding debt on the wrapped Ethereum credit pool. At present, there is only $3.1 million in cash deposits that are not tied up in loans. That limits Nexus's ability to withdraw funds. Maple has a 10-day waiting period before depositors can withdraw capital. This news comes as the collapse of the crypto exchange FTX continues to impact DeFi lending protocols. Have you been paying attention to Silvergate Bank? Because something's going on there. Now, Silvergate has always been kind of interesting from a crypto point of view. One interesting thing that happened is when they closed their door on the Libra DM stablecoin project, they bought the intellectual property and said that they intended to create a coin using those assets. Well, things started going downhill for them on Monday morning as the bank's shares plummeted 3%. What happened was that Morgan Stanley downgraded its rating on Silvergate Capital to underweight. That's due to the risks arising from the bankruptcy of the crypto exchange FTX. The bank's analysts believe that Silvergate faces significant uncertainty about deposit flows in the near term. They estimate that the bank's digital deposits have fallen about 60% so far in the fourth quarter. The demise of FTX could also lead to litigation and headline risk across the crypto industry. Alan Lane is Silverbank Capital's CEO. Now, he published a public letter that said that the bank conducted, quote, extensive due diligence on FTX and its related entities, including Alameda Research. He added that the bank followed all of the relevant regulatory procedures and investigated any potential untoward activity. Lane said that speculation and misinformation being spread by short sellers and other opportunists is trying to capitalize on the market uncertainty. Silvergate disclosed 1 month ago that FTX deposits made up nearly 10% of their $11.9 billion in deposits from digital asset customers. However, the bank does not appear to be a creditor to FTX. Now, Lane said that the bank has a resilient balance sheet and ample liquidity. He added that the lender carries cash and securities in excess of their digital asset-related deposit liabilities. Silvergate stock is down 53% over the last month and was little changed in after-hour trade on Monday. Well, since then, U.S. Congress has gotten involved. 3 U.S. senators, Elizabeth Warren, John Kennedy, and Roger Marshall, have written to Silvergate. They want answers about its supposed role in facilitating transfers between the exchange FTX and Alameda Research. The senator's letter come after allegations were made that SBF made large transfers of customer funds from the exchange to Alameda Research. FTX and other companies reportedly held around 20 accounts at Silvergate, according to a bankruptcy filing. The senator's letter said that there were, quote, reports that Mr. Bankman-Fried secretly transferred some $10 billion of customer funds to his trading vehicle, Alameda Research, to fund risky bets, violating both U.S. securities laws and FTX's own terms of service. They also said that they were concerned about Silvergate's role in these activities because of reports suggesting that Silvergate facilitated the transfer of FTX customer funds to Alameda. Now, Silvergate's shares were down another 6.15% and have touched a new 52-week low in Tuesday morning trade, adding to their roughly 50% decline since the FTX collapse. Silvergate has issued a statement saying that it was, quote, the victim of FTX's and Alameda Research's apparent misuse of customer assets. They said that they believe their full cooperation will help set the record straight. Now, the bank has until December 19th to officially respond to the senators. SBF has reportedly hired Mark Cohen, a former federal prosecutor, as his defense attorney. His spokesperson said the former CEO has retained Cohen amid a flurry of civil litigation from investors in the crypto exchange and investigations by U.S. lawmakers and regulators. Now, Cohen is a co-founder of the law firm Cohen & Gresser and was a former assistant U.S. attorney for the Eastern District of New York. He also worked on the defense team for Ghislaine Maxwell. Wait, didn't she get convicted? Anyway, FTX Group filed for bankruptcy under Chapter 11 in the District of Delaware on November 11th. This was following a reported liquidity crunch in which the firm claimed billions in leverage, making it unable to meet withdrawal demands. Filing in bankruptcy court suggested FTX could be accountable to more than 1 million creditors. After the company's collapse, SBF has made several media appearances and has spoken to reporters many times, despite criticism from some in the crypto space. The former CEO has apologized for his role in the exchange's downfall. He said that he plans to make it up to affected team members, but has not yet offered a concrete plan to compensate investors. John Ray became the exchange's CEO in November. Now, one defender SBF doesn't have to hire is Kevin O'Leary, because it was in an interview with Yahoo Finance today that Shark Tank's Mr. Wonderful called for calm following FTX's collapse. O'Leary stated that the exchange's former CEO should be considered innocent unless evidence emerges that he committed fraud. He called for FTX to be audited to reveal where the exchange's money went so that investors can get their funds back. On November 30th and December 1st, SBF took several interviews in which he claimed that he was not guilty of fraud, which led to backlash within the crypto community. However, O'Leary defended him in a new interview, saying that he is, quote, innocent until proven guilty. O'Leary explained, quote, I am of the ilk and of the group of people that says you're innocent until proven guilty. That's what I believe, and I want the facts. And so, if you tell me that you did or didn't do something, I'm going to believe you until I find out it's a falsehood. O'Leary stated that because of blockchain technology, all of the exchange's transactions are 100% auditable, and once this audit is performed, the truth about FTX will come out. Then, if anyone broke the law, they'll be prosecuted. He argued that investors will be able to get back at least some of their money if an audit is performed. Now, before its implosion, FTX was the second largest crypto exchange on the planet in terms of volume. That time has since passed. Since then, it's filed for bankruptcy with billions of dollars of investors' capital locked up in bankruptcy proceedings. It's estimated that FTX has over 1 million creditors, and that includes Mr. Wonderful. The founders of Three Arrows Capital have been subpoenaed to produce all financial information on the company. The subpoenas call for Su, Kyle Davies, and other individuals named to produce private keys, seed phrases, and any other means of accessing or controlling fiat assets and digital assets. They have 2 weeks to produce the requested documents and information. The hedge fund is in bankruptcy proceedings in the Southern District of New York and the British Virgin Islands, where it was incorporated. Zu and Davies disappeared from public view after the collapse of 3AC in July. However, both have been active on Twitter since the exchange FTX filed for bankruptcy last month. They are currently located in the UAE. Creditors have started taking control of some assets for liquidation, but subpoenas suggest that the judge does not think enough information has been provided on available assets. The House Financial Services Committee will hold a meeting with Gary Gensler, chair of the Securities Exchange Commission. This briefing is in preparation for a hearing on FTX next week. Also, senior staff from the CFTC briefed staff from both parties on the committee earlier today. Now, it is not known whether Gary Gensler or Rostin Benham will appear at the hearing on FTX next week. Benham testified before the Senate Ag Committee on FTX and related legislation last week. Gensler has said that the collapse of FTX is part of a pattern in the crypto industry and is likely to receive questions from both parties about whether the SEC could have done more to protect investors. Rohit Chopra, the director of the Consumer Financial Protection Bureau, will brief members on Wednesday. The focus of this discussion is expected to be a regular oversight hearing for the CFPB, which is scheduled for next week. The CFPB has been less active regarding digital assets, but crypto lender Nexo recently announced that it plans to leave the United States due to scrutiny from the CFPB. The CFPB has also indicated that it could take a more active role in regulating digital assets. The committee also expects to hear from SBF and John J. Ray III. That said, Sam said he would not participate until he feels like he has a better idea of what's going on. Representative Waters indicates that she expects him to be there. In a move that's sure to disappoint the crypto mining industry, Paraguay's lower house has failed to pass a bill that would have regulated cryptocurrency and mining. Now, Paraguay is known for its cheap energy prices. In fact, that's what attracted local and international firms to set up Bitcoin mines in the first place. Now, this bill was initially passed by the Paraguayan Senate in July, but the president vetoed it in August. In Monday's vote, the bill only received 36 votes, which was not enough to pass. The cryptocurrency mining industry in Paraguay is facing opposition from the local grid operator Ande and some members of the legislature. They argue that the grid's infrastructure cannot handle the excess load and that the industry does not greatly benefit the local economy and society. In August, the company asked the government to increase the electricity tariff for miners by up to 60% over the industrial rate. The proposed bill would have capped how much Ande can increase miners' tariffs to 50%. This was a major point of disagreement for both Ande and the government. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.